All right, hello traders. Let's get started with today's webinar. Now, please excuse us for excuse me if there is any kind of technical issues. Today we have been having a very difficult time with the internet connection, and so I'm really trying hard to get the platform up and running. Now, what we are going to be talking about today, you guys, we have very important. This is the basic and fundamental and most important part, I think, of understanding trading and of boosting your own professionalism in trading. And what we are going to be talking about today is trend trading, is trading within support and resistance levels, and trading within a counter trend. Those are things that you see all the time in the markets. Right now, we are in such an economic cycle that we're mostly seeing upward momentum. Now, the U.S. markets have slowed down quite significantly, but we're not quite there at the pinnacle and when the economic landscape of the world, it's not only the United States, it's the entire world, when it changes into a stagnant economic cycle. Stagnation, it's called. Europe actually has been a part of that, and you can see with the rising euro that the situation is not very likely to improve anytime soon for the European Union. So let's get, today's going to be a short webinar, only 30 minutes, and I want to give you guys prizes. Not today, but tomorrow. If you guys want to win some prizes after the webinar is finished, down below leave your account number and your ID. That way you guys can get some free stuff. Everybody loves free stuff. I love getting free stuff. You have to watch the video till the end to get that secret go ahead for writing your comments. All right, so I'll leave questions to the end. There's a few things that I want to draw out so that they're made very simple for you to understand. So what we're going to do is draw the most obvious cycles. So what we see in the U.S. markets and indices, and when Bitcoin grows, we have a move up, correction, move up, correction, move up, correction. So what in reality what we have here is one market move. We have this move here. We'll actually have a look at this one. Let's imagine that that's deeper. That's number 2. And then finally, during this very important breaking point, then we have the start of the third trend. All right, very simple, easy to understand. Now, where does it get more difficult? What about when the market expands like this? An expanding triangle. And what I mean by that is prices constantly doing this kind of move and going nowhere, but each high is progressively higher than the previous low. This is something that you see in international markets, something that you would see in, say, the Russian stock market, something that you would see in the Indian stock market. This technique in very aggressive markets is called stop hunting. Stop hunting, because when you use a Forex platform, then you have levels that you automatically close if the position gets too high. And this ties into the academical kind of study of market structure, technical analysis. It's called textbook technical analysis. And obviously professional market players, they are also aware of all of the tools that you and I use, and they want to make the most amount of money from these little easy to catch fish. Now the third market move is like this. We have a consolidation, a constriction, a winding up of price action, and this is what you would see somewhere around this level. So it would be something like this. Price action is crazy, then it gets smaller, shorter, smaller, shorter, and then within the day you have a little bit of action. Now what we can have here is a breakout to the top. Now this is normal textbook analysis. This is what it looks like. If we're going up, the trend is up. Then after we break out of the triangle, the trend is also going to be up. But what I have seen in the market very, very often is that the market does this, catches all of these people that have their stop losses there, dips down with a wick of a candle, and then shoots up. So be ready for that. There is no law, there is no economic law that governs what price should move like. And what we as traders do, we gather little bits and pieces of detail that we then put together, and we make an educated guess on where the price should go. All right, now that we've gotten that out of the way, this is going to be a live webinar, so we are going to be trading live. I do have one position open already, and it's a lot of action in the British pound. And actually, this will be a perfect example. Let's go ahead and use this example to have a look at what the British pound is doing. Perfect, easy to trade uptrend, right? Let me go and outline that for you. Just so you guys know, when we have a upward trend line, we're going up. We want to hold it at the bottom. We want to hold it at the bottom. So if I'm drawing a trend line for an asset like this that is in an obvious bullish uptrend, I want to capture the bottoms. And look at how perfect that is, guys. I'm going to get rid of the Bollinger Band so it doesn't confuse you too much. I'd ask you to bear with me for my moving averages, as they do serve a big purpose when looking at trends. So here we have the first cycle, the first move that I showed you guys. And you can see, remember that there's a saying in the trading world: a trend is more likely to continue than it is to stop. And so that's why we have a multi-quarter trend in one asset pair, or one currency pair in one asset class. So as you can see, the move that we have down here has not even broken the bullish trend line. We are officially not even at a correction. But because we want to make a lot of money throughout all of this, you want to look for different entries. Now, the next most obvious entry is this downtrend right here. I can't necessarily call it a downtrend because we didn't even break this entire level right here. But if looking at the short term, if looking just at a graph like this, this is an obvious downtrend. So on a smaller time frame, say on a 4-hour time frame, we have an obvious bear trend. And so we're going to go ahead and outline that right now. Excuse me, guys, one sec, please. All right, we are going to draw the trend line. Now, when we have a downward trend, you want to draw the trend line from the top. Why do we do this? Anybody in chat, go ahead and let me know why we draw the tops for a downtrend, and for an uptrend, we draw the bottom. Anybody know? I'll leave you guys in chat, let you guys answer that while I go ahead and draw this other line. And I forgot to give a warm welcome to my good friends, our very serious traders out there that come to all of the webinars, or most of the webinars. You guys are really troopers. You guys are soldiers, and you will reach that pinnacle, that turning point in your trading much sooner than an average person, because your dedication is that much higher than that of an average person. So that's what kind of differentiates the path of success in anything, but I'll leave that for another day. So just to be clear, Muhammad Tariq, welcome. Tinker, hello. Jayashree Ravikumar, welcome you guys. These are names that I see all the time. Minisoft Computers, no risk-free trades for today, but if you watch till the end of the webinar, I will tell you how to get some tomorrow, all right? Support and resistance, pretty much. Vichal Rustagi pretty much summed it up, but not in the way that I wanted you guys to answer. The reason we draw it from the top and to the bottom. You can do both. Like, I mean, you can draw at the top as well, and that will kind of signify the channel for you. Like, let me show you how that's done. I'm going to go ahead back on the daily graph. Go ahead and open up a trend line, close this, move it back here, and do the same. Oh, I forgot to do one thing. So what I do is drag the bottom to the top, and that is the trend line that I have to the top. I don't change it. I don't shift it. I start from bottom to top when it's in an uptrend. Good. So Jayashree Ravikumar is probably the closest if the downtrend breaks. That's it right there. We draw these lines, and so in order to have a channel, let me finish what I was telling you guys about. In order to have a channel, I then just draw the line again. So what I did was I drew the line, dragged it up here, then I drew another line and put it up here. Now, as you saw, they were a little bit mismatching, and that's because I'm kind of in a rush to do this webinar, but it's not a science. You don't have to sit there with a microscope and pinpoint everything. These are levels. Again, I'm not buying or selling specifically from that line. This is an area that I want to pay attention to. And so, as our friend Jayashree Ravikumar said, when we break this level to the downside, we are in an official bear trend. This is really big news, really big information. And if we were previously in a downtrend and we break an uptrend, then you want to sell. It's a continuation of the global trend. That confused you guys a bit. Let me say it in this example. We are in a global uptrend. This is the downtrend, the local downtrend that we have. When we break this local trend to the top side, we are going to continue a massive multi-quarter growth cycle. A growth spurt will continue for the pound US dollar. And so this is kind of the second level that I showed you guys previously, the second important level. And this is where the majority of my money gets made. I make the majority of my money finding a big trend, finding a correction, and then waiting for that correction to happen. Now, because you guys have stuck around here for so long, I want to give you guys another very special way to trade the Forex platform. Like, again, many of you ignore the Forex platform and trade FTT. I want to show you exactly. Dr. Manji Paul says to look for a breakout or look for a breakdown. That's what these lines are for. You don't need to draw the second line at the top like I did because it gives us very little information. What it does give us is a potential take profit level. This line that I drew at the top, let me zoom out a little bit. This line that I dragged out to the top, what do you think I'm going to use it for if I keep it there? I'm going to use it for a take profit level for my trade here. So I'm being a little bit conservative, but 10,000 is quite a large 30% to my account. It would be an awesome trade if the trade went through. Today we're having a little bit of fluctuation, but hey, it's the currency market. That's what happens. Today I was up $1,900 for the trade. It grew back a little bit. I have protected myself. What do you see on this graph? Like right here, what do you guys see? My entry point is right here. I have some sort of green line here. Price action is up there. It's a bullish candle on the day. Take profit up here. I have protected myself by dragging the stop loss into positive territory. Watch this, you guys. I'm not sure if any of you knew this, but my initial stop loss was down here. So notice that the stop loss was minus 1,300 for a $3,000 trade with a whopping 1 to 10 risk to reward ratio. But now that I see that the trade has stopped at the 200 EMA, so right here, this is the 200 EMA. It's a very important level. It's a very strong level. We had the previous attempt break out. That's good. I like that. So when I got in here almost at the bottom, I thought, hey, that's fantastic. But now that we had this move up and a continuation, I am worried. I am worried, but I still want to stay in the trend. So there's two things you can do. You can either click the trade and close it and take your $1,000 home, money in your pocket, nothing wrong with that. But I want to be an effective trader. I want to be the best trader I can be. I want to make the most amount of money for this trade. I want to stay in it. And so what I do in this situation, I grab the stop loss, pull it up. It's still below several levels. Like these are important levels that if they get broken down, I don't want to be in the trade at all. And I give myself a little bit of room. Yes, I'm not going to make much. I'll make some coffee for myself and lunch for the day. Not good, not bad. But I will protect myself and my $3,000 will return into my pocket. And so now the market is in charge. The market, this is actually a 2001, excuse me. I just breathed something in. This trade is with a 200 multiplier, so please I never recommend using the 500 multiplier. And how you can check is switch to the demo account. Switch to the demo account and check what your stop loss will be when you drag it down. With the 500 multiplier and 200 multiplier, the mathematics behind it are simple, but they're tedious. You don't want to pull out a calculator. You don't want to calculate the price and how many pips it will be below. You'll have to calculate how much each pip is worth. So you can do it at a glance by opening up the demo account and opening up the same trade size position. I wonder if I can show you guys. On my account, it's right here. So I'm having issues just switching between accounts right now. It's a little bit of a bug. I'll leave it at that. This is the kind of trick that you guys should all be using. Forex is really good in the sense that it allows you to make more mistakes than FTT and allows you to get in and out of trades at a breeze. But you trade time. You trade your time, and as we know, time is money. I will have to wait for this trade. To me to make $10,000, I'll have to wait a few weeks, if not a month or two. So the reason I pull my stop up and left it here is because I'm ready for volatility. In fact, it may be that price will just continue juggling here. Remember what I showed you guys, the unilateral triangle? Here it is. One triangle, two triangle, getting smaller. We're in an uptrend. Where are we likely to break out? Well, we could break out to down here to the 100 EMA, touch it, and then boom, break back out. I'm not like, this is for jokes, for fun. But if I was to say what's the most likely scenario, that could be it. Or we could just take off from where we are right now and go up higher, but very unlikely. Markets are tedious. And this brings me to the next point that I wanted to tell you. Start measuring time. Do you know how long a normal correction lasts for the asset that you trade? I'm sure if you guys, some of you are more experienced, you obviously trade one or two pairs. Beginners kind of want to capture everything. They want to trade gold, oil, Bitcoin, stocks, currencies, everything. That'll confuse you because, again, in order to make really good money at trading, you have to know your time frames. You have to know how long an asset will do absolutely nothing, and you have to be okay with sitting through that. And you don't have to guess and kind of, you should know these things. So, very simple, start recording the time. For example, if we look at how Bitcoin trades throughout the day. Bitcoin is a very hot topic. A lot of big companies are making a lot of money off of this, including Visa, including Tesla, including MasterCard. A lot of companies are jumping in, and this is huge. This graph looks beautiful. The one-day graph to me looks beautiful. When I see this does not look beautiful. But let's look intraday. Let's look at what happens inside of the day. We have a lot of flat. And sometimes the flat happens during the nighttime, and sometimes a big move happens during the nighttime. And you should also read what the volatility is. So what I mean by that is throughout the day, like let's take an example for the 26th of March. So somewhere around here, 10 a.m., this is when the European session opens for me, right? This is my local time. So this is when London and Europe have their pre-market, 1 hour pre-market. This at 11 a.m. is when the markets open. Then we have, just a bunch of diddle-daddling. Guys, have a look at this. European session, market open, 12, 13, 14, 15, 16, 17, 18. That's a work day. 1, 2, 3, 4, 5, 6, 7 hours. That's the entire workday. That's it. European traders are offline. What happens? They go offline. Boom. Actually, somewhere around here, U.S. traders come online. First 3 hours, U.S. traders do not touch Bitcoin futures at all. And then come towards the end of the day, we have a huge rise. Watch this. What is this? 0, 0. That's midnight. Midnight, U.S. markets are closed. This is the Asia trading session. Guys, look at this. This is the biggest volatility. If you go from 55,000, from 53,000, that's huge volatility that we did not see in the European session. This is what I mean by start measuring time. How long does an asset stay flat during the day? What time of day does it move? Write these questions down. You should know the answers to these questions to the assets that you trade. You should have thought about these questions, right? This is something that goes into your analysis, all right? So I taught you guys how to kind of measure and outline the trends. Let's go ahead and see if we can find some active trades I'm going to leave the Bitcoin trade alone. In fact, I'll leave the history alone. I'm going to have a look at some currencies. And this is also super important, guys. Super important in your trading. Use multiple time frames, right? The 1 day time frame gives you a lot of information. So guys, there's two ways we can take the webinar right now. Either A, I can start doing some trades live, or B, I can give you guys answers to your questions in chat. We only have 10 more minutes. I'm not going over 30 minutes on this webinar. So 10 more minutes, guys. Ask your questions. I'll have a look at what to trade in chat. Let's do everything together. By the way, if you miss Angie, she's sick right now. She's sick today. If you guys miss her, please give your condolences in chat. Can you please wish her well so that we can have her back at work? We do miss her. So Muhammad Tariq is asking, Yaroslav, can you please give me a quick overview about oil prices these days? So I read your comment about the Suez Canal. There was a ship blocking like $9 billion dollars worth of goods couldn't get through the Suez Canal. For those of you that don't know, the Suez Canal basically connects Asia to Europe, where they don't have to go all the way through Africa, but it's very, very small. Like, you can't have too many ships going through. And one of the largest ships in the world got stuck there, and we had a huge crisis. Oil prices shot up, and the world trade, especially in Europe, suffered. So we had European indexes kind of fall a little bit. So Vinay Sharma, you are banned from chat, my friend. Congratulations. You are getting banned, my friend. Quick way to get super banned. All right, good job, buddy. So yeah, absolutely no spamming. Absolutely no spamming in chat. Yeah, let's look for trades about the price of oil. I honestly have not read the last report from OPEC Plus. That would be the first go-to that I have. But also, I trade oil predominantly looking at the price action. So this was the fall due to the Suez Canal. You guys saw that it came to the 50 EMA. This looks like a very solid bull trend. I do see oil very much so as a breakout asset. So what I mean by that is, look, once we have the breakout, it really moves. So in our case, this is the breakout level. You would want to wait until oil gets above 65, and then if you have buy signals from your indicators, that would be a definite go-to. Another thing that I can try to give you guys is an understanding. Ooh, how do we measure corrections? How do we know what a correction will go to? Fibonacci levels. If I draw it for the entire trend, and I'm going to do it in the opposite direction because I use Fibonacci for a few ways. Fibonacci is a mathematical sequence that you can find in nature, obviously in math, in the way that our solar system works, in the way that our bodies are built, and even in the way that psychology works. The Fibonacci sequence, like if you imagine 38.2%, this is you're at the park, this is a bench. 38.2% and 61.8% are the benches, are the points that people are most likely to sit. When you sit on a bench, how often do you sit at 0.5? I don't think I've ever sat in the middle of a bench. I'm a humble person, or I try to be. I'm a humble person, and I usually save seats for other people. And so you can find me sitting at 38.2, 61.8, or maybe somewhere around the outskirts. But it's proven, semi-proven, that it works. And it works in the markets too. I'll show you guys some wonders. So when we have this correction price, guys, oh man, look at this. The 100 EMA and the 200 EMA come exactly to the levels of the Fibonacci sequence coming up off of this high. So this is the impulse. This is what we catch. So what I can expect, what I would expect from gold, from Bitcoin, actually Bitcoin is more up changing, but for British pound, the asset that I'm trading right now, I would expect it to drop to a level. From here, I would look to size up, and as the price gets higher, I'm looking to open another position as we correct down. So what about profit targets? If I move this a little bit down to a smaller impulse, we have some profit targets. So unfortunately, these are really close. 38.2 was taken really fast. 61.8 was taken really fast. Now we're kind of moving around here. So I guess what the next level would be, if we say, do this. Our next level that you would want to, say, buy oil at, and I think this could be the top, 74.75. For gold for the next little while, remember summer is a decrease oil period. So this guy actually, I saw a guy in chat ask about seasonality. Seasonality is very important. Seasonality is very important for the stock market. Seasonality is very important for the commodities market. Seasonality is even important for certain currencies that deal in commodity cyclicals, like say the Australian, New Zealand area becomes very, very quiet in the summertime. Why? Because they have wintertime when the northern hemisphere has summertime. All right, so seasonality is important. You should also start measuring that. There's a lot of articles you can read on the internet about seasonality. I do want to open up a trade before I go on. I hate doing this rushed, but it is. I do want to show you guys the British pound, how it works with the Fibonacci sequence as well, just because it's a super important tool you guys should know how to use. So Fibonacci levels, same thing. If we kind of measure from here, oh man, measure from here to here, where do we go to? 38.2. That's exactly where the reversal went to, stopped, and turned right around. So consider me crazy, but I do think that there's something here. The Fibonacci sequence definitely has something that is worth tracking, worth knowing. Oh, man. Worth knowing. So for the British pound, 144 is definitely reasonable within the next quarter. Definitely reasonable. So if I can hold my trade up until here, I could double my account. Again, I need to have confirmation that the British pound is going to continue growing, and there is no better confirmation than what you see on the graph. That's why we have trends, support and resistance levels, trend lines. Those are all levels that will kind of give you a gauge. And then you have these beautiful oscillators here at the bottom that also give you guys. Why did I open this trade? Guys, have a look at this. This is the daily graph, the history. So we had this bad boy drop below 200. The last time we dropped below 200 was here. This was the start of the uptrend. Maybe a little bit overdone, but nonetheless, it's the start of the uptrend. Like you can reopen a position here and become very, very wealthy. Same thing here. What I'm looking at is down here, guys. By the way, minus 200 is this level right here. So after this drop down, what did we have? We had a massive uptrend. This is every time it reaches 200. You guys unfortunately can't see it. There we go, right here. So this 200 level was reached last time when? Right before an uptrend happened. Now it does worry me because guys, look, every time we touch it, we then touch a little bit lower. So I could try to save my position by moving the stop loss farther, but I am A, ready to close the position in profit already. I am B, going to continue watching the British pound because this is a correction that I have been waiting to finish. So this is what you guys should be doing. You guys should be writing down all the assets that are in a major uptrend, that are going through a correction, and every day, once a day, check them. That could be your trading strategy. Trading does not require you to sit in front of the computer super very long time. No, you can do it half an hour, 1 hour a day, look through all the assets, a few hundred of them, make good solid plays, or focus on one really good asset and learn to trade it always up and down and sideways. So unfortunately, I do believe we are coming up to the end of the webinar. Guys, tomorrow I have another stream for you, and it is going to be about it's going to have definitely some live trading for you, but also going to be about, guys, give me 1 sec. I want to find the link so that I can give that to you guys in chat right now. So as I was saying, tomorrow we are going to have a giveaway, risk-free giveaway. In order to be a part of it, all you need to do is leave a comment after the webinar is over with your account number and account ID. And tomorrow I will do a raffle. I'll do a random raffle, and you guys can, perfect, here we go. And you guys can get some free stuff without doing anything. How many of you love free stuff? So there is the video in the comment section right now. You guys can, or not in the comment section, in the chat for you guys right now. Really quick, if I can answer some of your questions, what will be a decent profit percentage in FX trading? Oh, Muhammad Tariq, that is a great question. You're so used to trading fixed time trades that unfortunately, like, it's super hard to tell you what is. Like, have a look at this. I'm aiming for 347% gain. Am I going to get that much real soon? No. Am I going to be watching this asset and going to take it off even if it comes to, say, 80% of my trade? Yes. So there is never, I never expect the market to give me a certain amount. I never say to myself, I need to make $1,000 a day and I'll be fine. It's always, I take what the market gives, but I always have my ear to the market. I always am listening to kind of market reviews. I have the news on in the office all the time. It's very, it's a part of being, part of a bigger business. I believe the financial industry is a big worldwide business, and I'm kind of just a little part of it. I'm taking little snips of it. Central banks, right? They have unlimited money. They print money. I want to be closer to the printing machine. That's why I became a trader. I want to suck on the nipple of the central banks of the world, if that's possible. I know I'm getting a little creative there, but what I mean by that is it's absolutely possible to make a small piece of a big pie. Thank you guys for your kind words for Angie. We do miss her as well. So I'm looking for any kind of questions that I can answer. Seasons do matter. Oil prices, like I said, I do believe they could go up, but we could wait for a larger correction. It's very possible that there will be a larger correction because oil has been growing for a really strong amount of time. The last OPEC meeting I read was at the end of January, and the planning that they had was that they're ready to cut, and they're ready to cut in the summer. So when demand falls in the summer, OPEC Plus will cut supply in the summer. That was the last I heard, and then I haven't heard anything else. But oil is very technical, very technical. You can be a straight technical trader and still make money. All right, that's it for today, you guys. Thank you so much for coming. I know we went a little bit over time, but tomorrow we have another webinar for you where we will discuss. What did I send you? Oh, did I send you the link for today's webinar? We have a battle between analysts tomorrow. Yeah, I sent you guys the link for today. I do apologize for that. That's really weird. Yeah, tomorrow is going to be only live trades. If you guys want to come tomorrow and trade together with us, we will give an entire webinar to trend trading. So you guys are going to be able to trade, not necessarily trend trading, but trading in general. I will be competing either with Angie or with myself in order to get the best result. So tomorrow is a strictly trend trading. You guys will learn about my strategy, learn all the instruments that I use, and kind of learn to do it yourself. So Dr. Manning Paul saying, Angie, if you need any medical suggestions, you can go ahead and ask. That's actually very good. I may have some questions for you later, Dr. Manning Paul. All right, you guys, thank you so much for today. My name is Yaroslav Burchenko. Together with Olymp Trader, we wish you guys good luck trading out there. Don't forget to subscribe to our social media pages, as we do have quite a lot of those for you. So the social media would be right here. Right here. And right there. All right, you guys. So thank you very much for your time. And see you guys tomorrow when we have a trading battle to see who can make the most amount of money in an hour. Thank you guys so much, and see you guys next time.
The yield curve allows fixed income investors